people. I see we've got our co-host here. Pragmatic, I'll send you the mic in a sec. I'm just sending out some DMs to see if anyone is around that wants to hear all about Rujira, THORChain, and everything happening over there. And welcome everybody that's here early. Like I said, I'm just sending this out to a few people. If it's your first time joining one of my spaces, my name is Joe, and I'm a content creator. I started the Dead Cat Crypto YouTube channel. I haven't done one of these spaces in a long time, probably like 6 months. So I'm happy these guys agreed to join. Cedric, I see you down there. If you want a mic, just request. If anyone else wants a mic, especially once we get past the first 15 or 20 minutes, kind of lay out what's going on with Rujira and THORChain, please request a mic. Please request a mic. Pragmatic, how you doing, man?
All good, man. Glad to be here. It has been a long time indeed.
Yeah, I mean, I haven't been doing these spaces. I haven't been able to like commit to the same time every week, and usually that's when it was working good for me. So glad we were able to meet up. And of course, with the time zone difference, it just so happened to work out because I don't have work today, and usually I'm at work right now. So it's it's lucky convenience here. And as an American, I got my taxes done yesterday, so I probably needed to recover from that.
Good thing done. Till next year.
Brutal, brutal. I mean, obviously, if you're paying taxes, means you're making money, but I I had no losses. Like I didn't sell anything for a loss, and I should have probably done some tax loss harvesting in December, November. I didn't do that, so I had to pay. I owe. What do I owe? I think I owe like $6,000, and usually I get a little bit of a return. So it kind of sucks, man. I'd rather be using
Yeah,
money.
no, man. Yeah, especially in that market. Yeah, this is
Yeah,
painful. Yeah.
it sucks. But whatever. I'm getting better at my taxes, so I got to balance
It's a
out
skill,
some.
just like crypto.
Yeah, and my accountant is good. She's former IRS. She's retired from the IRS, and she works part time as a tax preparer. So I go to her, and she's kind of knowledgeable with crypto. She kind of knows, how it works,
This
and
is quite cool. Getting advice from a IRS. Yeah, she probably knows all the tricks
she knows the
to.
tricks, and she knows what not to do. She'll just say like, if you do this, it could get flagged. If you don't do this, it could get flagged. And there's not enough employees for them to audit everybody, but she knows what would come up on their radar. So just trying to avoid that. Pay my taxes, I guess. Try to forget about it. Try to forget about all the money they
That's
just
the way
took.
to go. Swallow
Yeah.
it and move on. No other way. Tax and death.
And you live in the EU, right?
Yeah, well,
Or
no, actually, I live in the UK, so no
okay.
more part of the EU.
Got it.
It's
Okay.
a similarly painful process, I guess,
I
but
bet. Yeah.
yeah, different season here, so we still have a bit of time for this year.
Well, we've got some people here. I'm sure some people here are waiting for the RUJI token. They're probably waiting to see what apps are going to pop up on chain. Maybe they just tuned in because they used to have some KUJI or they got some RUNE tokens and they want to see what's what. But why don't we do this? Why don't we just start with what the tokens are that are involved, and then we could talk about what's going to actually launch, and then we can come back to the specifics of the RUJI token at the end, if that's all right with you. Because I'm holding some Kujira ecosystem tokens. Some of those are getting merged. Is that still the plan, or did that change?
Yeah, no, the plan is still the same. So uh, Kujira will launch, Rujira will launch with a new token, RUJI. This token has 50% of its supply reserved for KUJI holder and a few other projects participating. including so what you get rKUJI as well, which is just the same as KUJI. They were the KUJI we sold back in August when we are fundraising to pay off the bad debt. Then you get FUZN, the former the Launchpad token that is gonna be merging with the RUJI team and handling the RUJI Venture division going forward. So everything related to Launchpad. Then third token is Wink. So this one is the former Wink Up team. They are also building the NFT marketplace. So that will be their vertical, and they are being integrated into the RUJI team. And the last one is NSTK, Nutstack. You remember this one? It was popular at some point as the KUJI. It was launched by the KUJI team back in the day, so it's just coming back in house. So all of those are the RUJI ecosystem tokens. They merge with different ratio depending on the share of the supply that was allocated and their own supply. There will be a process with clear, an easy front end and the clear explanation of how this works. The process will be fairly simple. You will have to, it's a 3-step process. You will IBC transfer your token from a KUJI to the Atom hub. And from there, you will be able to do step 2, which is deposit those into THORChain. And then from there, you can, well, you will have to wait for now. It will be in the merger contract. You will start to, after a month, earn additional RUJI if you stay deposited into that contract. And you will be to withdraw from the moment we do the TG. So merger and TG are two separate processes. The timing of the merge is going to be very soon. I'm not going to commit on dates anymore because it's out of our hand anyway, and it tends to always backfire whenever we try to make a tentative date. So, but it's going to be, the merge is going to be very, very soon, and TG will be a bit further after that. So not committing on any dates. Technically, it will probably be possible later, somewhere in April, but we also want to coordinate as a TG with a potential listing on the centralized exchanges. So we will have to probably delay a bit to make sure we launch with the appropriate setup. So one more point, like I only mentioned for the merge, the KUJI ecosystem tokens, but there is also, of course, Levana merging, so holder of the LVN token, and they will get 5% of the supply. And then we have to follow the exact same process as any other KUJI holder, with the difference that because the token is native of the Osmosis chain, they will just, the first step would just be to IBC transfer from Osmosis to Cosmos Hub, and then it's the exact same process.
Got it. Okay, this is obviously people are probably holding these tokens. It's probably not worth swapping them now, or even the last couple of months. And it sounds like the process is straightforward.
Yeah, no, yeah. I mean, yeah, at the end, it's really up to people when they want to swap them. But yeah, it feels like really not the best period. Like probably better to wait at least for the merge and see how things are on the other side. But yeah, it's no, I will not provide any advice on timing on selling or buying tokens.
Right. But I'm sure there's people that are in this space that probably just have the tokens sitting in a wallet. Don't forget about those. Like he said, there's going to be a 3-step process where you're going to basically, I guess, merge whatever tokens you have from that short list, and then there'll be sometime later RUJI token genesis event, and you'll get that as the replacement token. That's the simple way, I guess, to explain it. Is that right?
Yes, exactly. And maybe another important mechanism to discuss is the rewards for people who decide to stay in the merge contract. So, and the decay function that goes with the merge. So the timeline to merge from the moment we will launch the merge contract will be 12 months. The way it works is that after, so you will have 1 month, 30 days to merge at a full conversion ratio. So for example, one KUJI give you 0.37 something RUJI. So during the first month, no matter when you merge your KUJI, you will get for each 0.37 20 something. After that, for the rest of the 12 months, so 11 more months, every day, every block, you will have a little decay function. And so you can think of it as a multiplier. You start with a 1x multiplier of your conversion ratio, and progressively it turns towards 0 at the end of the 12 months period. And what happened with the token? So some people will not be merging either because they have lost their key, or they are not following, or so they will, or they are also like, for example, so some token from the team that are staying behind to secure the chain. So you will have a share of the supply for sure. That will not be merging. Also, some people who still haven't merged the first conversion from the Terra days back to KUJI chain. There's still like a few million tokens there. So all those tokens that either won't be merging at all or will be merging late. Well, if you stay in the merge contract, you will be able to start earning after the first months a bit of rewards, and effectively it's a transfer from people who don't merge or merge late toward people who merge and stay in the contract. So you will be able to get a yield in RUJI, and you can withdraw from this contract what you merge plus any reward you accrued, but it's a one-way gate. So from the moment you get out of this contract, you cannot go back into the merger contract to re-earn rewards. So it will be also interesting because it will create some game theory dynamics where effectively people will have a choice between getting out of the merge contract to go and stack RUJI and start earning protocol revenue at the very beginning, because everybody will still be in the merge contract. Even if revenue is not that big initially, it will probably be fairly attractive. But if you get out, then you cannot go back into the merge contracts. We create this interesting dynamic. So it should be a bit of fun gamification for people participating.
So let me see if I understand. So let's say I have Wink tokens, or I have KUJI tokens. I'm going to enter the merge contract with those tokens, and I'll start earning rewards in RUJI for staying in the merge contract. But there might be other opportunities elsewhere to use those tokens. So I get one opportunity. Well, I could exit once with my full position to go utilize the tokens elsewhere, but then I can never enter back in the merge contract. Is that right?
Yeah, exactly. That's how it's designed.
So it's like a passive strategy versus an active strategy that is going to be determined by, like you said, there'll be some game theory, and basically different people will have just different appetites for risk, right?
Well, I don't know if I would say passive. Like, it depends how you define passive, but both strategies are passive in the sense that once you are in the contract, whether it's you are in the merge contract or whether you are in the single-sided RUJI stacking contract, it's passive. Like, you don't have to do anything. You have
it's a staking contract. Oh, so you get to exit to stake.
So you can exit, and then there is an actual stacking contract for RUJI where you can, which is very much like on Kujira, where you could just so you will have two stacking options. We can also discuss that, but the basic plain vanilla one is stacking, single-sided stacking. So you can just stack your RUJI token, and you earn your pro rata share of protocol revenue. So all the apps on Rojira, the order books, the perps, the money markets, Bitcoin-backed stablecoins, the Launchpad, the NFT marketplace. So they won't be there at the beginning, all of them. We'll start just with the order book and roll out little by little. But eventually, all those apps, they generate revenue. And this revenue, 100% of that flow back when you have a revenue share with a THORChain base layer for most of it. So we send back 50% to THORChain base layer to pay for security. And then the other 50% is distributed to stackers. And so you will have this option as a RUJI holder. You can either stay in the merge contract and earn those reward for up to a year by just staying there and waiting for people not to merge or to merge late, or you can withdraw and stack in the normal single-sided stacking contract and earn protocol revenue. So in one case, you earn, if you stay in the merge contract, you will earn more RUJI. If you go into the revenue contract, the stacking contracts will pay revenue into USDC. So in one case, you earn RUJI, in the other case, you earn USDC.
Oh, okay,
And in
cool.
one
So
case, it's just for 1 year, it's a temporary thing, and the other case is a permanent thing.
all right. This is cool. So people have some stuff to consider here. And I'm taking notes and I'm replying with the notes that I take to the original post of this space. So if anyone needs to catch up, I don't know if it's going to post it in order, but I'm just going to anything crucial that comes out of this, I'll just reply to that original post for the space. If I get something wrong, someone just let me know. I'll delete it and fix it so that at the end there'll be an account of kind of the TLDR. You don't have to go back and listen to the whole space, although you can, because it's spaces are fun and we know that crypto people have nothing better to do while they wait for the market to reverse. So those are your options. You get two strategies for that too. And both are passive, just like with the staking contract versus the merge contract versus the staking option, which I think it's good. I like people having choices. There'll be some chatter about what's the best move and when. Uh, and I think that's helpful to know if you're holding. You said it was 4 tokens, right? KUJI, Fusion, Wink, and InStake. It was those 4.
Yeah, and rKUJI as well. rKUJI
Oh,
for
rKUJI.
recovery KUJI. Yeah,
Okay.
it's just like 10 million of the KUJI supply will not be migrated, and people, those 10 million will go to rKUJI instead.
But what is that rKUJI token?
It was, if you remember, you may have not followed. So back in July, end of July, August last year.
Oh,
So
yes,
you remember the team? It was a liquidation cascade. Then
yes.
it was 3 million of bad debts in the protocol. So we had to raise emergency capital, and we did that by selling those rKUJI, which at the
Mhm.
time we did not know we would do this merger, and so it was supposed to just be like a vesting over 3 months. And eventually we did this merger, so it was not making sense to
Right.
create a vesting
Okay.
contract and convert. So
And what percent of the supply of RUJI is going to be set aside for these 5 tokens? Is it 50, you said, or 5? I missed that.
no, for those 5 tokens, it's 50,
And
50,
it's
and
not an
5
even
is for
distribution.
Levana.
So each token will have a different ratio that will.
Yeah, absolutely, totally. So most of it, 45.3% from memory, goes to KUJI, the very vast majority of it, and then the rest, each of the others get around
Right.
2%, one something percent.
Perfect. And I'm guessing there's no snapshot. It's whatever you have in your wallet at the time that the merge contract goes
Yeah,
live.
everything has been set already like a long time ago, back last summer, and it's no, like now people can trade this token freely, and the exchange ratio is set, and no matter what the price is, or all what matters is how much token you have and how much you deposit in the merge contract, and that's
Right.
times the
So
conversion
there's
ratio
no way to
between.
game this with a snapshot. It's just whatever you have. Either
No,
you
no,
bought
no.
it or you held it, and now you're gonna physically exchange it almost for the RUJI token.
Exactly.
Okay.
Digital, physically exchange.
I like this. Okay. So we got a good overview of what's going to happen to the tokens. I'm sure that's what a lot of people are worried about. If they're holding these, they're just kind of sitting there. Now you know you're getting. First of all, I'm a big fan of merging tokens. I think it needs to happen all over the place. And in Cosmos, good lord, they need to merge a lot of tokens. So that's number one. And that's my opinion. There's too many tokens. People can't pay attention to 50 projects at the same time. If you have more than 10 tokens in your portfolio, it becomes a full-time job. Now these are going to merge into the RUJI token, which is going to be basically a composite of these 5 tokens at varying um, ratios, plus 50% of the supply is going to be like this organic new token launch. And it's going to be part of an ecosystem, which I'm guessing is just going to look like a bunch of applications that sit on THORChain but are separate from the existing THORChain liquidity. Is that close to what it's going to look like?
So not so the app layer is part of THORChain. It's a Cosmosm smart contract
Okay.
section inside the THORChain layer one. It's not a layer two. It shares the same block time as THORChain, uh, but it doesn't have atomicity by default for swaps with base layer liquidity, just because when you do a swap on THORChain, they have a very different way of ordering transaction inside the block. Instead of having a mempool where just validator can pick and choose the order of the transaction, they rank all the swaps by price impact at the end of each block, and from the lowest price impact to the highest price impact. And because of that, because this always happens at the end of the block, it means that for the app layer and also RUJI app, even if we are inside the same the same blockchain, the same layer one, we cannot have transaction atomicity. However, we came up with a market making strategy which allows us to virtualize the liquidity of the base layer. And so I don't know if you want me to dig into this, what this market making strategy does, but high level, it allows to effectively replicate the market maker, the automated market maker can query the base layer pool and knows for, let's say, I have 10,000 Bitcoin, USDC, and I want to buy Bitcoin. I know how much I will get on the base layer with a margin of error, which depends on the transaction happening inside this block, other than me doing the same buy for Bitcoin. But I can have a fairly strong view of how much I would get more or less. So we can have these strategies that effectively query how much you would get, quote you and pay you the Bitcoin you will have bought at the end of the block inside the block at a slightly worse price just to cover inside in case the price move inside the block and you get less than what you were expecting. And it allows to have transaction atomicity inside the app layer. So it means that one application can do something, then do a swap, tapping into the virtualized base layer liquidity, and then do something else and keep going, like the beautiful thing smart contract can do all together in a very short amount of time inside the block. So we will be able to do that, and that means that not from day one, because we are launching without this strategy, will be shortly after that we'll be launching this one. It's pretty much all written. It's just need to do a bit of testing and refining once the apps are live. And once we have that, it means that effectively we will have on the RUJI app layer the same liquidity than you have on the base layer, and with a slightly worse price. But it also means that every dollar of volumes on the app layer, also assuming it's the order is filled against base layer liquidity or against the virtualized base layer liquidity, it will not be 100%. You will also have other strategy living on the app layer and other people limit orders that may give you a better price, but anything else will be priced against the base layer. And that means we can effectively eliminate the liquidity bootstrapping risk, which was the biggest challenge for KUJI. We had all those beautiful apps, but we are never able to attract the needed liquidity to bootstrap the economic activity to offer a great user experience for trader on this order book. We could not do that, and that's, by the way, why the team ended up like taking leverage against KUJI way more than they should have done. And when price went down, eventually got liquidated, and what put us in this situation in the first place, which ended up being a great thing because now we can tap into the THORChain liquidity and have a much wider scope that we would have ever expected as a small little layer one in the small Cosmos ecosystem. But yes, that was the price we had to pay to get there. And yeah, now that's one of the most attractive part of this deal we did with THORChain is we effectively remove this liquidity bootstrapping risk.
Okay, so you are going to be able to tap that liquidity and THORChain, I mean, it in my opinion, THORChain is what DeFi should look like. It's bridgeless. There's no wrapped assets, and you can swap Bitcoin for Ethereum. You could swap, you know, unrelated tokens for each other through THORChain's protocol. There's a good amount of liquidity there. THORChain generates a lot of fees. There's tremendous demand to do these swaps, and I don't remember exactly how much liquidity is there, but I'm guessing. Let me look it up right now, actually, because I'm on.
It's around 120 million, I think, at the moment.
Um,
Maybe
it,
with
it
a
it's
recent
saying
price action, it may have.
181, but some of it's probably the
Oh,
runes.
no, no. Okay. So what is relevant is the liquidity in the base layer pools. So what you are reading is probably also includes the value of RUNE bonded with node
Yeah,
operators. But what matter is the pool part, and this must be unchecked today, but probably around between 100 and 120 million still after all the price negative price action we had recently. So still a very decent amount of liquidity, and knowing that most of this liquidity is Bitcoin, ETH, and USDC and USDT. So good quality token, which is very different from the situation we're in on Kujira, where we had at the peak of the peak, we had like around 30 million of TVL making market on Fin, but most of this TVL was in our own token, KUJI, and in a few other ecosystem tokens, and very little BTC, ETH, and major stables, which is what at the end does most of the on-chain volumes. So very, very different setup, much more liquidity, but also liquidity of much higher quality. And those are not, by the way, wrapped or bridge token. And that's what you are saying. Those are native assets secured by THORChain without third-party bridges, without any centralized issuer like BitGo issuing wrapped BTC on Ethereum, and then this wrapped BTC being bridged by Axelar on Osmosis or on Kujira. Like you have two layers of intermediaries and exogenous risk. With THORChain, we remove all that, and we have this concept of secured asset, which is just pure Bitcoin that is secured in an Asgard vault by a validator set of 100 different nodes with in a vault that has a private key that churn every 3 days. So it's a much higher security setup than any centralized exchange
right.
or wrapped equivalents.
Yeah, and you were right. I'm looking on DeFi Llama doesn't have the correct statistics. It looks like THORChain's reporting what you said, 118 million total liquidity, and then it's saying 240 million TVL. So that the TVL probably includes the Rune token, whereas like the total liquidity, I guess, doesn't. Does that sound right?
Uh, on DeFi Llama, they may include that, or maybe they include still some of the landing stuff. Yeah, I'm not sure
Yeah,
what they
this is
put
on
in
the
there.
THORChain website, but either way, 100 million.
Yeah, so if it's THORChain, that is the two metrics they show is one is liquidity in the pool, and the big one is liquidity in pool plus value of nodes of
Right. Okay.
bonded room.
Okay. Yep. 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 All right. And that's the validator bond is the Rune token.
Yeah, yeah. But
Okay.
it's a
Yeah, it's a little different than
portion of
Cosmos
the RUNE
chain.
tokens that is bonded.
Yeah, it's a little different than the way Cosmos chains work because um, you can't just like buy one token and stake it, right? It's a little bit different. The validators play a more active part in the mechanism of like the swap. So maybe for retail, if you do use it, you might not even know you're using it, and you're probably better off, especially if you're using it through a wallet, right? Like I guess like Trust Wallet uses it. That's a good one to that people a lot of people know, and there's a ton of other wallets as well. So you a lot of
Yeah,
times you're
Ledger
using
Live,
THORChain.
OKX, like a
Yeah,
lot of
OKX is
those.
a good one. Yeah, I use it
And
through OKX
the,
as well because I have to off ramp. When I off ramp crypto, I have to do it with an exchange that doesn't have a full selection of tokens. So I swap everything with THORChain. I think I swap everything the last time I did. I think I swapped everything into like AVAX or something, and then from like Cosmos tokens into something else, then into AVAX, and THORChain was one of the swaps. And you're better off not knowing that it's
yeah, that's the beauty of those interface. At the end, they abstract all this complexity away. And
Yeah.
by the way, that's also one of the great attraction for RUJI launch. It means that we will be able to go. So THORChain has all those great integration with wallet providers, and we will be able to go to the same wallet provider and try to get them to integrate with app layer products on top of just the base layer swap, so limit orders or even lending, borrowing, or saving products. And we can have we'll have the same very successful referral affiliate fee model as THORChain. We'll replicate that on the app layer, which means that those interface will be able to charge a little extra fee for their user. For the user, it's always cheaper to go directly on the RUJI website if they want to use it. But if you want to target like a much broader audience of people who are not that much into DeFi and navigating 20 websites to do things and don't really care, they just want something from their wallet directly, and they don't even know they are using actually THORChain in the backend, where it will be the same for RUJI. We'll be able to abstract that away and just have those front ends, those wallets integrating with some of the features. So that's one of the plans we have to grow the ecosystems when we are all set up and running.
All right, cool. Well, I guess I'm curious. I was curious about the token merge. I was curious about how RUJI apps are going to work with the base chain, because it is a little bit different than typical permissionless chains. Of course, the apps, what's going to launch? Maybe not right away, but what do you see coming? And I'm guessing these are permissioned applications, at least at the onset. What will people be able to do first?
On the permission part, it's a bit like KUJI was. It's semi-permission in the sense like anybody can come and make a merge request and require a smart contract to be deployed, but it has to follow a certain process and ultimately be voted on by node operators. They need to upgrade their software to reflect your smart contract, and you need 2/3 of them to do that. So it's not permissionless, but it's also not fully wall guarded. You just have to follow the process, and if you get, you can convince the operator to deploy your contract. Boom, here you are. So then, in terms of products, so the big one we'll start with is our flagship product, which is the former FIN, so the 100% on-chain order book exchange. Together with that, we launched RUJI Pool, which is the former BO, which is the AMMs, the automated market makers that add liquidity to the order book. There are a lot of cool stuff we can do. We will start with a simple like XYK strategy that people are familiar with. But we are gonna bring a few improvements versus the KUJI version. So not right out of the gate, but one of the first things I would like us to change is to allow to have the yield measured separately from the principal and potentially streamed out, which allow to do a sort of interesting steps and on top of it. And then we will have like an alternative market making strategy that will come later. So the first one I mentioned, big one, will be the ones that virtualize the liquidity from the base layer. The way it works, this strategy is effectively doing an arbitrage by borrowing for just the duration of one block, the token the buyer want to buy, and then taking the buyer's USDC or whatever token he used to buy and swap it at the end of the block on the base layer, and then capturing a little spread between what is sold, the BTC or whatever token, to the buyer on RUJI, and how much he bought back from the base layer, and use the proceeds to repay the debt that was borrowed for just one block and keep a little delta. And most of the time, it will be profitable. Sometimes you may have a little shortfall because price has moved on the base layer inside the block. And in that case, the LP in the strategy takes a loss. But in average over long term, this is profitable. And we will refine the parameters as we collect more data and we start to have more better sense of the type of spreads that are typically charged. And that's very interesting because it means this strategy will be a market making strategy that democratizes access to arbitrage So everybody will be able to effectively partake into this type of arbitrage. And it will be single-sided deposits. So no impermanent loss with that. You deposit either USDC or BTC or whatever token you want, and that's what you will be earning. So that's quite cool. And then we will add some more strategy. We want to have like a Uniswap V3 type of concentrated liquidity at fixed price. Then we also have the Oracle orders, which are something very unique to Kujira and now to RUJI, where you can effectively put a limit price, but instead of having a fixed price, you have a fixed spread, premium or discount versus an Oracle price. And every block this updates. And so with this primitive, we can build some interesting alternative market making strategies. So we'll be also working on that. And then once we have the landing market, we also would like to make some delta neutral strategies for hedging the impermanent loss. So we have some design already in mind for that. So a ton of cool stuff we'll be able to do to provide opportunity for people to earn return on their assets. We will also provide like very good analytics. That's one of the key stuff we want to do. We used to have that on Manta DAO, and we are gonna generalize the type of graphs we were showing on Manta DAO, showing you the performance of your LPs, the EL, the price impact, the yield, all of that in a very clear format that will help people to better decide how to allocate their capital. So ton of cool stuff on the pool front alone. We just be a progressive rollout based on how we prioritize things. Then third product will be perps. So this one is a bit out of the end of the legacy Kujira team. This is Levana team building that. So they are gonna bring their peer-to-pool model to RUJI with a refreshed interface and the first version that will probably be fairly similar to the deployment they have on Osmosis with a few tweaks. And they are considering like building a V2 after that that will be radically different. So let's see, but that would be another one. Then of course we'll have the landing markets. So similar to what we had on Kujira called Ghosts. So landing and borrowing. That will allow us to build all sorts of things, including the data neutral strategy. And together with landing, from the moment we introduce that, we'll also introduce Orca, the liquidation engine, which is the cornerstone product of Kujira, the inception product, the first one that was ever launched back in the day on Terra when Kujira was just one product, was Orca. So that will come together with landing. And then we will have RUJI Venture, the former pilot launchpad, totally revamped with a more interesting end-to-end solution, effectively for project we want to launch, being able to, through a very simple UI, effectively create your tokenomics, spin out a DAO so your token can be held safely, plus a multisig for the operational wallets or the team allocation. Then launch your token with a Dutch auction mechanism, allowing people to bid using a Dutch auction, so having a very efficient price discovery mechanism for your token. Run that for a few days. All the parameters can be customed. Then from there, once the sales of your token ends, automatically spin out a liquidity pool and a market making strategy for your token on RUJI trades. And from that moment, like all in one go step by step, you get your token listed and trading with very, very little need for technical oversight. And there will be some more feature that will be added, like allowing teams also from the same UI to spin out like a revenue converter contract. And using the stacking contract from DAO, you will be able to effectively, for projects that collect revenue in a lot of different tokens, get everything sent to one place and convert it to USDC or Bitcoin or whatever you want it to be, and having that out of the gate instead of having to deal with dust. So all those little toolings to make things very easy for projects we want to launch. And eventually we want to add to that also some form of real-time accounting similar again to what we are doing on MontaDAO, but manually. We want to automatize that and make it like kind of standard for any project that launch on Kujira. And the vision being that, of course, initially we are just targeting some crypto projects, but eventually crypto can only win if it moves beyond crypto. And so we want to attract like real world business, like we want the next generation of entrepreneurs that want to raise capital to open a restaurant or a hair salon or whatever small business that we want to offer them the option to decide to build on blockchain rail, and not because they are a blockchain project, but because it's much cheaper and gives them access to all those extra services at very low cost, from fundraising to automated accounting to payment collections, and with to spinning out a legal wrapper with using partner projects like Autonomous. That's a project that does that. So eventually we have this vision of trying to onboard also real world business and really try to get this crypto tech beyond just crypto, to really get people to use what this tech is supposed to be, meaning an alternative financial system, financial rails for economic activity, not just on chain, but in the real world as well. So that was a long parable about venture. Coming back to the product, and we'll probably launch also options down the line. That's lower priority because at the moment, at least, option is a fairly small market. If you look at all of the option products on chain, none have really taken off. But it's a nice primitive to add to build additional products on top of the core primitive. So we'll probably do that. And then there is, of course, the NFT marketplace. That's a Kujira team, the former RUNE X team, and they are building that, and they will be launching also somewhere this year. So it's going to be a lot of things between the first launch and let's say next summer. So in the next 6 months or so, it's going to be a progressive rollout with hopefully 1 to 2 apps getting out every month, and then taking the time to test, to get feedback, to improve, and trying not to rush things too much. And my personal view is that, especially on trade and pools, we will be better off nailing that, having very good strategy, very good reporting, and very good products people want to use before moving on to the other pieces. And the value of like the value proposition here is very powerful as well. It means that effectively you will be able to make markets to do. This is what you can do today on Uniswap, but for native assets like Bitcoin without having to use a wrapped version. So you will be able to access DeFi with native assets without wrapped or intermediary. And instead of doing making market for Bitcoin and USDC on with a bridge or wrapped version on Ethereum on Uniswap, you can do it on Rujira with the native version of the token. So it's quite cool. And I think it's it's just a big potential there, and it's going to be exciting to see how this goes.
Yeah, I mean, for people that are just joining, I know some people popped in. We started off talking about the RUJI token, how to use your existing Kujira assets to acquire the new RUJI, the merge token, and there's going to be a merge contract open sometime soon. You'll have 12 months to put your tokens into that contract. After 30 days, there is a decay. So you want to do that upfront the first month. And from there, you'll have the opportunity to earn rewards, whether it be staking or staying in the merge contract. We talked about apps coming in, right? A whole bunch of apps. I caught most of them, but these apps will be voted on by the THORChain node operators, and they'll be deployed directly on THORChain. It's not a layer 2. Some of the apps coming, you have order book exchange, AMM, various DeFi strategies, whether it be arbitrage, you said perps, you said lending, NFT marketplace, also token launchpad, allowing teams to design their tokenomics, create DAOs right from the launch, and then of course there'll be a method for them to seed liquidity. I'm guessing on the AMM and order book exchange. We talked about interacting with Bitcoin without using a wrap version of the asset. That's going to be attractive to the hardcore DeFi people who avoid bridges, which I know a lot of people do. Um, if anyone down there has any questions, now's a good time to request the mic. I guess I have one more question as it relates to Cosmos. Since these are COSM contracts, are people going to be able to IBC over to THORChain, or is that still going to be off limits, at least for now?
So very good question. It's not going to be possible, at least initially, and very probably never in the form of IBC implementation you see on all other Cosmos chain.
Okay.
So there are a few considerations around that topic, but so it comes down effectively to again economic security. So you may have heard of this big debate we're having at the moment. THORChain, historically, has been very conservative on its security budget. He has this model where effectively for every $1 of exogenous assets they secure, they want $2 of bonded RUNE. We can discuss that, why it's they are the only one doing that, why it's probably not a good idea, and what it's definitely not a sustainable solution to be able to scale the app layer. But if you were to enable IBC, then that would mean that you can have those secured assets would be exported to other IBC chain. And I think it will be probably fairly successful because, of course, if you can have instead of having wrap BTC bridged by Axela on Osmosis, you can have just a native BTC secured by THORChain. It should be demand for that. But the issue is, from the moment you can export those assets, that means they leave the chain, so they are not generating any economic activity on THORChain. They are not generating any revenue, and therefore nobody is paying for their security. So that's one of the issues, and it consumes security budget of the node operator. So that's one of the issue, but also technically, THORChain has its own system of connecting with other ecosystem, with what they call the Bifrost, and it's not just for IBC chain. They also connect to EVM chains and to Bitcoin and other ETDSA chains. So having those two systems in parallel is not really optimal. So what will possibly happen, and I mean at the end that's really not my area of expertise, and there is a team, Strangelove team, that is working on that. But a possible version of IBC would be that effectively it's not really IBC, but you can have any IBC assets on any other chain than Cosmos Hub that will IBC to the Cosmos Hub, to Atom, to the Gaia chain. And then from there, because Atom is connected to THORChain, those tokens can be deposited in an Asgard vault on the Cosmos Hub, and secure asset representation minted on the app layer. So I suspect that's how things will end up working, and then we can have we can import any Cosmos assets into THORChain. And actually, we can import any other token the same way from any other connected chain into THORChain, which is quite cool because it means eventually we can offer a very wide range of token. There are some limitation with that. The big one, I mean, at the moment is that to be able to have an asset on the app layer, you need to have a base layer pool. So it means a RUNE pool on the base layer, token plus RUNE. This is definitely not a good model. You don't want RUNE to be paired with all sorts of tile and assets. You end up with a model where effectively you are offering exit liquidity for all tokens with bad tokenomics, and you are increasing the quantity of bad tokens in your pool, and they are taking away the good token. BTC is a stable coin for your pool, so that's not something you want to do. But we can come up with a system where you just allow to observe those tokens, have them directly on the app layer without needing a base layer pool. And once we do this change, we can start to list all sorts of things all at the base layer. So that means traders right now likes to trade meme coins, where you can have the meme coins from Base and from Solana and from all connected chains listed on Rujira, all in one place in decentralized order. Or you can get any major token on Ethereum and have a secured asset on the THORChain app layer and get it traded on RUJI Trade. So it opens quite a lot of possibility, but no direct IBC. That would be this Bifrost system instead.
Got it. Okay. Yeah, I know that some in Cosmos would like to see THORChain opened up to IBC. I know the THORChain, I'm sure there's people on both sides of it, but I know that that's been an issue to kind of keep THORChain somewhat isolated from the rest. But I think as there's more app activity, there'll be more use cases and more implementations that haven't been totally discussed just yet. But this is all good info, by the way.
You know,
I'm taking notes while you're talking. Go ahead.
Great, good sign. But eventually, one way or another, it's going to happen. It's just the detail of the implementation aren't clear yet. But Strangelove, which is a team that is very much Cosmos native and knows the IBC very well, is actively working. That's one of the key items on their to-do list is IBC connection for THORChain.
Yeah, I did see that they've been working closely for a while, maybe not quite a year, but a good amount of time.
Yes, they're working on a few other things as well. For example, other chain outside of Cosmos integration. So depending on like the events and given everything that happened recently with THORChain, IBC was certainly not a priority. And at the moment, I think onboarding other chains, so XRP is coming, Solana is coming, Tom is coming as well, Tron. Those are like big chains that do big volume. So there is probably a higher incentive to get those on board first because they are likely going to generate more volume and more fees for THORChain. But eventually, IBC is going to come here and we will have a solution for that too.
Cool. Again, if anyone wants to request a mic, feel free. Is there anything that you want to mention that I didn't ask about related to everything, going on with Rujira?
No, I think it's just like, I know people have been frustrating, plus market is going down, plus things have been taken more time than expected, and we had a ton of drama on our side first, and then on THORChain side. So we all feel the exhaustion, but we are very close now, like very, very close. We had the first showcase of the omni-chain experience with the launch of RUJI Swap that went live earlier last week. That's so still in very early test phase, but it's nice. It gives you a sense of how you can come and connect your different wallets from different chains and see all in one place your balance from your Ethereum wallet and your Base wallet and your Bitcoin wallet and your Atom wallet, and how you can do all those cool things. And eventually, once we have the order book, you will be able to see all your balances and put an order directly from your local wallet into the order book. It's quite nice. It's the closest we have of a centralized exchange experience, but it's fully decentralized. It has no intermediary. It's just use this beautiful THORChain technology, and we are really, really getting there. There is still a bit of education process to go through with the node operators, get them comfortable with the idea of relaxing the security budget and how all of that is going to help to scale the network and give a new provide a new wave of growth for THORChain. But I'm very confident we are going to get there, and eventually I think we need to remove entirely this cap on secured assets. That's necessary to offer a good user experience for people, especially once you introduce leverage to the system. And those conversations are happening. This is all gonna be a reality and starting very soon. And I think once we have the first app live and we start generating revenue, those node operators are gonna start to also get much more excited and engaged about the potential of the app layer, and all the situation will will unlock. And so very, very excited about what is to come. And I know people have been waiting for a long time, but we are near to the end, or rather near to the new start.
Well, I appreciate all the info. I'm sitting there with a couple of my KUJI tokens just waiting. And for people that don't know, those tokens will get merged. Some of them, we said KUJI, rKUJI, NSTK or Unstake, Fusion, and Wink. You'll be able to engage with those when? Next month? Q2 is starting. So it'll be Q2.
So depend. We are 31st here. So next month, meaning April.
April.
Yeah. For the merge,
Oh, cool.
definitely
Soon. Okay. All right. So
very soon.
people have been patient. A little more time isn't going to kill anybody. Really appreciate the info. I'll be watching. If there's any crucial info that you need me to share out, feel free to DM me either from your account or from the RUJI account. Happy to get that out to the people, and I'll look forward to it, man. Good luck with the launches. Sounds like you guys have a lot planned besides the token merge. So hoping it all works out.
Thanks a lot, man. Super appreciated. Thank you.
Yep. And good to catch up after all this time, man. Take it
Yeah.
easy.
We'll do that again after the lunch, like anytime.
Yeah, for sure. Absolutely. Yep. Of course.